Having sufficient income is often a barrier to financial independence that a lot of people can face. Fortunately, we can pretty much all work hard enough in order to eliminate this barrier. And that's why in this video, I'm going to give you 6 priorities that you should be focusing on in order to maximize your income and achieve financial independence. Now, even though these priorities are going to be listed from 1 to 6, you can actually achieve these in any order. The way that I wanted to kind of structure these is kind of be like what I would choose as my priority first. So priority 1 is going to be the most important in my eyes, all the way up until priority 6. But I also think that they're all very important and you can actually work on them in any order. The first priority that I have for you is to focus on your primary job. Okay, so to increase your income, in order to maximize your income, I think that first, most people should be looking at their primary job. So where they're making a majority of their income. And there are so many different ways that you can get more income out of your primary job. First off, probably the easiest, and if you are actually a high performer, is to just ask for a raise. One of the most important things that most people do not do because they just don't feel comfortable doing it is just asking for a raise, especially if you are actually worth that much to the company. If you are worth that much, they're probably going to come to some kind of agreement in increasing your income, increasing your paycheck, if you are an actual asset to the company. So if you are a high performer, if you feel like you are worth more to that company, if you feel like you can actually you are actually producing enough in order to warrant it, then simply try asking for a raise in order to increase your income. The next thing that you can do in order to increase income at your primary job is to, get a promotion or switch jobs within that same company. Oftentimes, if you can perform other kinds of tasks that might be more beneficial to the company, those might come with higher pays. So don't be afraid to go after promotions. And then additionally, you can go for the raise, you can go for a promotion, you can go for switching jobs within the company. Another thing that you can do at your primary day job is you can actually just work more hours. So some people if they're not on salary and they're actually paid on an hourly rate, it's possible for you to possibly just ask for more hours. Some companies, they just want more people to work more hours because they have so much work that can get done at any time. So if you are, if you have a job that way, if you are able to work more hours and get more time, more pay, then that is another way that you can simply just increase your income pretty easily. If none of those work out good enough for you when it comes to your primary day job, another thing that a lot of people mostly are unwilling to do or just feel like they're too scared to do is to actually switch jobs and to switch companies. And that could be a very big opportunity for you. So don't be afraid to switch jobs and earn a higher income. That is one of the biggest things that most people, if they feel trapped in their own job, they feel like they can't switch. It's untrue. It's a lot easier to switch jobs, today than it was, 20 years ago and it was in the past. A good reason on why you might want to switch jobs comes from ADP research. In their workforce vitality report, job switchers experienced a 4.9% growth on average from what they were making before, as opposed to job holders, which only experienced an average of 4.5%. Now, coming back to your actual job, okay, so another option for you is to just tap into your existing benefits. If you have existing benefits that you're not taking advantage of, this could in turn increase your income. Whether that benefit comes from a tax advantage or a 401k match, maybe it's for health insurance benefits. There's so many different ways that you can tap into your existing benefits at your work and thus actually increasing your income through that way. Additionally, a lot of careers, they will simply pay you more just for having some kind of certification or attaining some kind of education. And so, and in the process, you might actually get paid, like tuition assistance through your employer to actually do so. Because we've all seen that chart in high school, let me put it up on the screen for you, where the higher your education, generally on average, the higher your income is going to be. And that might actually apply to you. Another priority number 2 that you want to focus on is multiple income streams. So once you have, tackled your primary income stream, you want to go after multiple income streams. And this is going to be a way that you can actually maximize your income because you can turn so many different kinds of projects into income. And so one of the easiest ways I think to get started is to try to turn a hobby into making money, like making money. So try to turn one of your hobbies, something you actually enjoy, into making money. This is a really easy way to get started with creating a multiple income stream. So this can be, there are many different kinds of hobbies that can be monetizable. Some of the most common examples might include photography, writing, designing, and so many other kinds of different things that you could do in your free time that you might already be doing, something that you already do for enjoyment. Some of those things can be monetized and you can create income streams from those hobbies. Some of the hobbies that you might already have and that you might already enjoy could create cash flow for yourself. Other forms of income streams that you might want to pursue include things such as credit card bonuses. So some credit cards, they will actually give you a bonus for spending a certain amount, as an introductory period to kind of get you to get that credit card in the first place. And if you use it responsibly, those bonuses every once in a while could create another income stream for you. Similarly to that, bank bonuses could also be something that you could go after to create a small income stream. So bank bonuses, basically, if you just move money around into banks, they will usually give you a bonus for opening up a new account with them and having a certain amount of money with them. So that could be another way you could increase your cash flow. Some other great examples that I've found include flipping items. So this simply involves going out and purchasing items for cheap and selling them online, or maybe even in your local marketplace for a much higher, upfront profit. Another one might be getting involved in the gig economy. So the gig economy, that is a pretty broad term. Basically what that entails is working as an independent contractor. And so the common examples is for like ride sharing or for home sharing, for delivery services and things like that. So these are all kind of some examples that you can get involved in. But the point of priority number 2 is to create income streams from multiple different sources that are unrelated to each other, because relying solely and on just one income stream, i.e. your job, could be very risky because jobs could go away at any moment, including yours. And that leads me to priority number 3. And priority number 3, in order to increase your income, is actually to get investment income. Okay, so investment income, another very broad topic. But increasing your investment income is very important, especially if you want to achieve financial independence, because one day, when you want to achieve financial independence, you might be relying mostly on that investment income. And some different ways that you can increase your investment income involve different kinds of assets that you can actually invest in. So for example, if you are investing primarily in index funds, one way that you might create investment income, maybe not at this moment, but one way you might create investment income is by realizing capital gains. So capital gains are the gains you actually make on your investments, and they're unrealized until you actually sell them off. So when it comes time to when you start living off your investments, or you start using your investments for income, you're going to actually create that income. You can do that by selling off some of your assets and realizing those capital gains, thus creating income for yourself. Another way that you make income from your investments is through dividends. So sometimes the companies that you invest in, they pass off profits onto their shareholders, i.e. you. So if you own, a company stock, they might pass on some of their profits to you in the form of a dividend. And for example, here is the total stock market index, one that I like to reference often. And here is from Vanguard, VTSAX. They had an average of 1.76% in 2020 of a dividend yield. So basically, for every $100 worth of a share, you're going to get $1.76 in a dividend in 2020. The next way that you can gain income from your investments is through interest. Interest can be paid to you through various different kinds of investments. Probably the most common is through bonds. As if you're investing in, let's say, corporate bonds, that company is paying you interest in exchange for you, giving them money for them to put back into their business. Another way that you can create income through investments is through real estate. So real estate is a really big way that you can create income for yourself, especially through rental income. So if you actually own rental properties, those properties could potentially produce investment income for you. Next up, with priority number 4, I think it is very important to make sure that this is a very big priority when it comes to maximizing your income. But before we move on to that, if you're liking this video so far, please make sure you like it and give it a thumbs up. It really does help me out, and I really do appreciate that. Priority number 4 is business income. So business income is another way that you can maximize your income, because business income in and of itself is another way to increase, one of those streams, another way to increase your cash flow. And there are many different ways that you can start a business. And it doesn't just mean that this business has to be, exponentially large. There are many different ways that businesses come, many different forms that businesses come in, I should say. And so one way that pretty much anyone can get started with creating a business is through their services. So many different businesses are services. And actually, the United States economy, a lot of it is actually reliant on services, a majority of it, in fact. And so creating a service that's something that is needed within your community could be a way that you could start a business today. This can also be offered online in an online format. And another way that you can create a business is through that actual real estate. So that could be investment income, but it can also be a business. You can also create a business income through actual real estate. And typically, when it's considered a business rather than an investment, the real estate is going to have more active involvement. So for example, a lot of people like to use Airbnb. So that is actually starting your own business. You're actually participating in the gig economy, but you are an independent contractor and you actually have your own business. If you're running, an Airbnb, something that has, a higher turnover and something that isn't as passive as, say, something more traditional like a rental property. So this is when real estate could be considered more of a business rather than an investment income. Another great way that you can get started with starting your own business is by dealing with specialized products. So, a lot of products today, it's going to be really hard to compete with, those basic products because they're sold at, at such low rates as some of the big box stores. But more specialized products, people are usually more looking for specialized products and something they can't actually just get at these big box stores. And that is a market that you could get involved in if that's something that interests you. And this can especially be done online. So specialized products can easily be sold online. That's where most people are going to be looking for them. Lastly, when it comes to business income, another really easy one to get involved in is simply consulting. So even if you're in your day job, it's something that you have a lot of knowledge in. Consulting is something that pretty much anyone can start as long as they have a customer base that they can find, as long as there is some demand for it. Consulting is something that many people are looking for, and your knowledge and expertise is something that you could actually sell and create a business out of. Priority number 5 is slightly different than what we've been talking about so far. Priority number 5 is to actually look at your income and to try to keep more of it. And the way that you keep more of your income is by reducing your taxes. So there are many different ways that you can reduce your taxes because there are many different kinds of income taxes that you might be facing. You might be facing income taxes such as, federal income taxes. You might be facing state income taxes. And in some kind of way, FICA taxes are also a kind of a tax on your income. So there are so many different ways that you can try to keep more of your income. But basically, some really broad concepts that you might want to understand is that not all income is subject to FICA. FICA being Social Security and Medicare tax. Okay, so and also if you are self-employed, then you're going to be paying SECA, which is the self-employed version of FICA, which is going to be double the rate that you would pay if you were making a W-2 wage. So some income is not subject to FICA. Mainly like investment income and passive income is not going to be subject to FICA, so that could save you and allow you to keep more of your income if you're focusing on getting those more passive sources of income rather than active sources of income. That could save you some money on your taxes. Additionally, you can minimize your taxes through many different strategies when it comes to your federal income taxes, by utilizing tax deductions, adjustments to your income, and tax credits. The same could be true for your state income tax as well. Some states, they follow very similar rules that the federal government does. Some states do not. So it's up to you to learn what your state income taxes are and see if there's any ways that you can actually reduce your state income tax. And finally, if you are paying too many taxes every single year, you might be withholding way too much. You might be giving the government a interest-free loan. And so one way that you can keep more of your income now is by reducing your tax withholdings. So adjust your tax withholdings. And this is going to be done with Form W-4. If you're working for an employer, you're going to actually submit this form and say, I want less of my taxes withheld from my paycheck because I'm giving the government way too much every single year and I'm getting way too much of it back. So I'm basically giving them an interest-free loan. And then we have priority number 6. Now, priority number 6 is also a little bit different than what we've been talking about, and that is because it is known as reverse passive income. Okay, so reverse passive income is a fancy way of saying reduce your expenses, but not in the way that you might think. I'm not saying, just don't buy that coffee every single morning. In this case, what I'm saying is permanently reducing a current expense or deleting or, eliminating an expense entirely. So this is known as reverse passive income because it has a permanent effect. It's not a day-to-day decision. So a day-to-day decision, like I said, would have been, getting that coffee and choosing not to get that coffee. So that might save you, $3, $4, $5 that day, but it's not a permanent decision. So a permanent decision might be moving into a smaller house. Okay, moving into a cheaper area, getting a different car, getting rid of one of your cars. So these are more permanent decisions that are going to have long-lasting effects, and you only have to make the decision once. So any kind of thing that you can do in order to reduce your bill for the long term, reduce one expense that you already have, or eliminate one expense completely, that is going to be known as reverse passive income. So you are actually eliminating that expense or you are decreasing it permanently. And that's going to be a decision that you only have to make once. And that is going to have the reverse effect of increasing your income because you're going to have more income that you could potentially put towards investments and then create more income. But wait, I do have a priority number 7, a bonus priority for you today, and the bonus priority is to start tracking your finances if you are not already, okay? So it is very important that if you want to increase your income, maximize your income, and achieve financial independence, it's important to know how much your income you are actually making. And the easiest way to do so is by tracking all of your finances all in one place. And that's why I recommend that you use free online software such as Personal Capital. Go to oncashflow.com/resources, and on that page you will see Personal Capital and why I use Personal Capital in order to track all of my income. It's a completely free online software, and just by checking out that page, you're helping to support On Cashflow. Thank you so much for watching this video. I'm Zach from oncashflow.com, and I hope to see you next time.